Dear friends, changing the way to look at things also change the things we look at. In changing times, it is important that we remain flexible and understand any subject from different perspectives. I am Debajyoti Bhattacharya, Chartered Accountant, and today we will discuss in detail about the new tax regime and old tax regime which will be necessary for filing the income tax returns for financial year 2023-24, that is for the period starting from 1st April 2023 and ending on 31st March 2024. Albert Einstein once said that the hardest thing in the world to understand is income tax. For us Indians, the statement rings true as tax laws in our country are quite complicated and requires great deal of time and effort to understand. With the main purpose to simplify the direct tax system, a new tax regime was introduced in Budget 2020. Since taxpayers' response to the new regime was very poor, in Budget 2023, significant changes were made to the new regime. The revised new tax regime offers a higher tax exemption and reduces the surcharge for the super rich. With the changes incorporated, the ministry is confident that at least 50% of the taxpayers would shift to the new regime. The government also made the new tax regime the default option, inviting criticisms that it would slowly phase out the old regime. While the new tax regime has been made more attractive in terms of tax rates, it does not have the deductions and exemptions like the old system. Under the new regime, the taxpayers would not be entitled to exemptions like interest on housing loan, house rent allowance, travel allowance, deductions for investments in public provident fund, the insurance premium and medical insurance premium among others. However, the taxpayers have the flexibility to decide whether the old system is beneficial for them or they would be better off opting the new one. Let us now look at the tax slabs under the two regimes for financial year 23-24. In regular tax regime, up to Rs 2,50,000 there is no income tax. For incomes from 2,50,000 to 5 lakhs, 5% tax will be applied. For incomes from 5 lakhs to 10 lakhs, 20% tax rate will be applied, and for incomes more than 10 lakhs, 30% tax rate will be applied. This is applicable also for a resident woman. However, higher exemption limit is applicable in case of senior citizen or super senior citizen. Now, who is a senior citizen? Senior citizen under Income Tax Act is an individual who is at least 60 years of age but less than 80 years. For them, up to Rs 3 lakhs, there is no income tax. For incomes from 3 lakhs to 5 lakhs, 5% tax will be applied. For incomes from 5 lakhs to 10 lakhs, 20% tax rate will be applied, and for incomes more than 10 lakhs, 30% tax rate will be applied. Now let us understand the tax slabs of a super senior citizen. A super senior citizen is an individual who is at least 80 years of age at any time during the previous year. For them, up to Rs 5 lakhs, there is no income tax. For incomes from 5 lakhs to 10 lakhs, 20% tax rate will be applied. And for incomes for more than 10 lakhs, 30% tax rate will be applicable. Now let us look at the tax rate under the alternative tax regime. Under alternative tax regime, up to Rs 3 lakhs of total income, the rate of tax is nil. For income from 3 lakhs to 6 lakhs, 5%. From 6 lakhs to 9 lakhs, 10%. From 9 lakhs to 12 lakhs, 15%. From 12 lakhs to 15 lakhs, 20%. And above Rs 15 lakhs, the rate of tax will be 30%. There is an increase in the income tax rebate to Rs 7 lakhs in the new tax regime as compared to 5 lakhs under the old tax regime. Now you would understand this concept of rebate. Under section 87A, a resident individual whose total income does not exceed Rs 5 lakhs can claim a tax rebate. The quantum of rebate is 100% of income tax or Rs 12,500, whichever is lower. Rebate under section 87A, however, is not available to non-resident individuals. The above rebate of 87A is available to a resident individual even if tax is payable under alternative tax regime. Now there is an amendment. In the case of a resident individual who has opted for regular tax regime from the assessment year 24-25, the rebate under section 87A will continue without any amendment. However, the aforesaid scheme of section 87A has been amended with effect from assessment year 24-25 for the alternative tax regime. The amended scheme is applicable only in case of a resident individual who wants to pay tax under alternative tax regime and whose total income does not exceed rupees 7 lakhs. Then the quantum of rebate will be 100% of income tax or rupees 25,000, whichever is less. Rebate under section 87A is subject to marginal relief for the assessment year 24-25. If net income exceeds rupees 7 lakhs but does not exceed rupees 7,27,770, income tax on such income cannot exceed the amount by which the net income exceeds rupees 7 lakh. However, such marginal relief is not available in case of regular tax regime. Few exemption deductions are not available if the assessee pays tax within the parameters of alternative tax regime. Under the new regime, standard deduction in case of salaried employees and standard deduction in case of family pension will be available for financial year 23-24. From the assessment year 24-25, the alternative tax regime is the default tax regime. However, assessees can avail the benefit of regular tax regime by exercising the option under the provisions of the Act. Highest surcharge rate under alternative regime is reduced to 25% from 37%, which will reduce the tax liability for the super rich. If the assessee does not have business profession income, the option to opt for regular tax regime must be exercised along with the return of income for every previous year. If, however, the assessee has business profession income and no option is exercised, he will be governed by the alternative tax regime. However, the assessee can avail the benefit of regular tax regime, and such option, once exercised, shall apply to subsequent assessment years as well. However, the option, once exercised for any previous year, can be withdrawn only once for a previous year other than the previous year in which it was exercised, and thereafter the person shall never be eligible to exercise the option of availing the benefit of regular tax regime except when such person ceases to have any income from business or profession. Now, which one will be beneficial, alternative tax regime or regular tax regime? One can find out the net income and tax liability under the new tax regime as well as alternative tax regime. By comparing the tax liability under two regimes, one can find out which one attracts lesser tax incidence. Let us take a simple example and understand the two tax regimes. Assessee Arun gives the following information: salary income rupees 34 lakhs, house rent allowance 6 lakhs, HRA exemption rupees 60,000, dividend income 90,000, FD income 2,72,000, deduction under section 80C 1,50,000, mediclaim insurance premium 25,000, donation to PM Cares Fund 10,000, and now Arun wants to know which tax regime is beneficial for him. Let us now make a comparative study. Under regular tax regime, salary income will be 34 lakhs, as well as in the alternative tax regime, the same amount of salary will be taken into account for computation of total income. However, the exemption portion of HRA will be available only in case of regular tax regime. So, gross salary is rupees 39,40,000 in case of regular tax regime and 40 lakhs in case of alternative tax regime. Standard deduction will be available under both regimes. Now, dividend and FD interest is also included. Now, if we see that the deductions under section 80C, 80D and 80G will be available under regular tax regime but not available under alternative tax regime. After making this computation, the total tax liability comes to 10,73,900 in case of regular tax regime and 10,33,340 in case of alternative tax regime. Since the tax liability is lower under alternative tax regime, Arun in this case is advised not to opt for regular tax regime. It is advisable to make this type of comparison before coming to any specific conclusion on which regime to be selected. My friends, hope you have understood the main points under both regimes. Thank you very much for watching. Take good care, stay positive, love yourself and your family. God bless you all.